Hi guys, today is August 13, 2020 and futures again pointing to a higher open as weekly jobless claims came in much better than expected. Actually, it was 963 million weekly claims versus 1.1 million expected. So a better number, and futures are pointing higher. So let's jump to SPY ETF or S&P 500, and I still have this support and resistance line, and the SPY broke out of this resistance line, and I think it's going higher actually. So the all-time high is at 339, and I think it's gonna overtake that in the next probably a week or so. I expect that, and I think it's going much higher to me. There are just too much money out there, and a lot of liquidity, and people are very optimistic, and so we are going higher. So let's jump to stocks, and if you wanna, by the way, if you wanna check out my trades, what I'm trading on a pretty much everyday basis, my portfolio, you can see my see the description in this video to my Patreon trading club. Okay, so let's start with Tesla. Okay, so Tesla a couple of days ago announced 5-to-1 split because it wanted to make shares more accessible to employees and investors, and new shares will be issued on August 28th to shareholders of record on August 21st, and will begin trading on a new adjusted split basis on August 28th. So what can you say? I mean, shares are higher, much higher, and pre-market is trading a lot higher, at already at $1,621. Wow, that's unbelievable. So it looks like Tesla is still going higher, and I mean, there's nothing to stop Tesla, and I mean, it was a dip that probably should have been bought into like 1400, and now shares are higher, and probably a buy to me. I mean, at this point. So Tesla is a buy. RRGB. Okay, so Red Robin Gourmet Burgers. It's a restaurant chain. I reported quarter loss like yesterday of 4 cents, wider than expected. Revenue below estimates. It said it was hit by pandemic and limited capacity sitting. So I mean, this stock desperately needs a vaccine, pretty much. And I mean, once we have a vaccine, and once we have recovery, once we have a sitting that's not limited, I mean, this stock may go higher, but for now it's going to be dead money for a while. RRGB. So staying with this restaurant theme, EAT, Brinker International, stock symbol EAT. It's a parent of Chili's and Maggiano's Little Italy restaurants chains, and reported much smaller than expected loss. Revenue below estimates. Experts expect smaller than expected loss in the current quarter, though. And I mean, the shares have been trading higher, and sitting in overbought territory, and to me, I would wait for this stock to come down a little bit, even though it's opening higher today, but I would wait this to be closer to $30 before I jump into the stock. Okay, the next stock is Roku. So Roku was rated a buy in a new coverage by Deutsche Bank that knows that Roku is the leader in a category with almost 50% of the market share. And I mean, the Deutsche Bank was very impressed by with Roku that is building on its existing customer base, and Roku to me is a buy. I mean, it's trading in the range, and it came down recently after the earnings, and I think it's an opportunity to jump into the stock. So Roku to me is pretty good buy. I would wait for this to come down a little bit, maybe to like mid 140s, but in general, it's a buy on a dip stock. Moderna. So Moderna was reported that it struck more than $1.5 billion deal with the U.S. government to buy 100 million doses of its vaccine. And to me, Moderna, I mean, all these vaccine stocks, and including Moderna, has been under pressure recently after Russia reported that they have came out was the vaccine pretty much, but that vaccine is completely untested. It came through the 1 and 2 phases and didn't go through phase 3, and pretty much phase 3 is they said it's going to be live. So completely untested vaccine. I'm not sure why all these vaccine stocks are selling off on this news, but to me Moderna is a buy in this area under $70, and especially considering that I mean they're very close to clinical data, and they're in phase 3 trials, and by the end of the year people expect them to come out with some results. So to me Moderna is a buy, and let's stay with this vaccines theme. Inovio Pharmaceuticals. Inovio reported earnings a couple of days ago, and analysts after the call, analysts actually criticized the company, and they said that there are more questions than answers about this vaccine after the call, but I didn't hear anything unusual about the vaccine. They said that they will publish the results in upcoming weeks, and I mean there were some questions to me, but nothing like that would make me sell the stock that much. So I think it was just sold off too much, and I actually think it's a pretty good, interesting spec buy in this area, in a $13 area. I know. Okay, VR Biotechnology. VR reported pretty good earnings actually 2 days ago. Analysts came out actually reported much smaller than expected loss, and that beat analyst expectations, and revenue was also higher than expected. They said also they expect to start 2 and 3 trial program to treat COVID in August, with clinical data expected at the end of the year. So this stock is trading higher, and actually it's, I think it's a pretty good buy, especially closer to $50 to me. And I mean, I've been recommending VR since it was like in the 20s, and now sitting at $50, and I think it's still a buy. They have a lot of collaboration with different companies like GlaxoSmithKline and Biogen, and I think the stock could go actually higher than that. VIR. Okay, AEO. American Eagle. JP Morgan upgraded the stock to overweight from neutral, saying American Eagle is mispriced on the low side. I actually agree, and I'm actually bought shares in around like $11 area, and I think American Eagle is actually a pretty good buy in my opinion. It has a pretty good technical setup, and I think it's going higher actually. So right now it's trading above its 200-day moving average, and I think the shares could be an interesting spec buy as well. Okay, Kodak. Eastman Kodak, the battleground stock. Jim Continenza, its executive chairman, said that the company supported the government decision to hold a potential loan to the company, saying the deal requires more work. Well, you know, as you know, the government loan was halted not because of the deal that required more work, but because of the Securities and Exchange Commission investigation into insider trading into this company. So, I mean, I would stay away from the stock. I mean, it's just way too dangerous to get in at these prices, even though it came down a lot recently, but I would still stay away from the stock. KODK. Lyft reported earnings yesterday after hours, and shares are trading lower, but it reported a loss of 86 cents, smaller than 99 cents expected. Revenue beat. Lyft said that the July ridership was up 78% compared to April, and I actually think that Lyft is way too cheap not to buy here. Okay, so I think under $30, I think Lyft is a pretty good buy in my opinion in here, because I mean they're discovered a play on a vaccine, obviously, and on a recovery, and I think shares may go higher after this. LYFT VRM. Vroom So Vroom reported earnings, and it's a car retailer and e-commerce company that enables consumers to buy, sell cars online. It reported wider than expected loss, but revenue did come in above estimates, but it gave lower than expected forecast. And in general, Vroom is an interesting spec buy, but $69 was way too high. It came in way too high, and I think closer to $50 I would be interested in Vroom VRM. Okay, Fossil Group reported adjusted loss much smaller than expected. Revenue easily beat, and actually I was very surprised by this report actually. So I didn't expect them to beat that easily, the expectations, and I actually think that under $5 Fossil could be an interesting buy to me. FOSL AZPN. Aspen Technology. So Aspen Technology, it's a maker of asset optimization software, reported a big beat on EPS and revenue, said that the customers continue to invest in its products, and Aspen, AZPN, that's a really good company. I actually reported very nice numbers, and I would be interested to buy this if it comes down a little bit. I mean, it's opening a lot higher, but in the low hundreds, I think Aspen is still a very good buy, in my opinion. Okay, SPG. So SPG, it's a Simon Properties. It's a mall operator, and along with BPY, it's another mall operator. It's called Brookfield Property Partners. They're trying to buy JCPenney's business. It's two of the biggest JCPenney's landlords, and actually SPG, I like SPG. I mean, it's one of the better mall operators. SPG. It's one of the better mall operators, and I think the shares may go higher actually from here. And it's a pretty good. It has a pretty good management team, and I like them a lot. And they're very tough, and I think the shares may go higher. Okay, and I'll give you one more. Apple. So Apple reported that they're readying new subscription bundles called Apple One, and also on a separate note, Apple is readying a new exercise app that would compete to Peloton and Nike apps. So Peloton on these news is lower, and has been lower for a while, for a few days. And so it shows in general, if you like Peloton before, you should like Peloton now. I mean, even better than that, because all this news about Apple coming out with a new app and competing with Peloton, I don't think it's gonna happen, because they will have their space and Peloton will have its space. And also on this news, Nike also is lower, and like I said about Peloton, if you like Nike before, you probably like Nike now. So Peloton and Nike on a sell-off, in my opinion, is a pretty good buy. Okay guys, that's it. Don't forget to subscribe to my channel, click the like button, and I'll see you on Monday.